This is the daily fiscal pulse for the 20th of April, 2026. Remember, we're looking back at a single day of flows here, which means we're capturing conditions as they stood at Monday's close, not real time. Let's set the stage first. Markets are fixated on one thing right now, the Iran and Middle East situation. You're seeing headlines like Trump extends ceasefire in Iran, citing seriously fractured Iranian government, and that's clearly moving price action across the board. That said, headlines and actual cash flows don't always move in sync, so we'll keep our focus on the numbers. The headline number is a net fiscal transfer of $40.4 billion for the day. That looks fine on the surface. What matters more though is the momentum shift. The 5-day flow has dropped to roughly half its recent pace. Tax receipts are the main story here, bringing in $53.1 billion. The market benchmark is showing some staying power. ES futures landed at 7,148, still comfortably above the 20-day moving average at 6,762. The range over that 20-day window is about 826 points wide. Despite the fiscal headwind we're about to get into, equities are holding their ground. The picture becomes clearer when you widen the lens a bit. Government spending is averaging about $61.9 billion per day over the last 5 days. Now compare that to the 20-day average of $10.0 billion per day. That's a sharp deceleration. When less cash is flowing through the system, households see less of it, and markets ultimately feel the squeeze. Financial conditions are getting tighter. Year over year tells the same story. Fiscal year-to-date spending is at $723.0 billion, roughly 14% below where we were last year at this point. That's a material reduction in fiscal support being pumped into the economy. If you're thinking about going long ES, this backdrop is worth taking seriously. Our financial conditions gauge is sitting at -63. Here's what's interesting though. We've seen regimes like this plenty of times before, and even with tighter liquidity conditions, the S&P has historically averaged around positive 1.0% over the following month. Liquidity and price don't always move in lockstep. What does this mean when you boil it down? Fiscal flows are running below last year's levels, which means the cushion underneath the market just isn't as thick. On days when news breaks positively, stocks can still grind upward. But when risk events flare up, like an escalation in the Iran and Middle East conflict, the downside can accelerate faster because there's less liquidity sitting there to absorb the selling. Keep 2 dates on your radar. The 22nd of April brings the SSA payment cycle, the 4th Wednesday of the month, and that can affect short-term flows. The 15th of April individual income tax deadline is actually the year's single biggest reserve drain event. Fiscal drag is clearly visible in the data. What we might be seeing is the rate of tightening stabilizing somewhat. The real inflection point is probably tied to how these scheduled flows actually play out. That's where we'll find the edge moving forward.